Hello everyone. I'm going to do a market review using the way I traded today, which is the flip zone, and trading only the flips of the zones and the mitigation of the flips. So we had CPI here, no participation. We made this inversion here, traded back, and then traded lower. So we are taking this zone here, and you see price retraced to the 50% of the zone, made another low here. I took a trade around here and targeted this. Then we flip, we close it above that zone, retrace it to the 50%, mitigate. Now that's mitigation of the flip. I took the trade here, targeting this swing here. And since now we have another zone, which is this fractal here, which it's not zone, it's flip zone. I'm gonna find a good name for this. Let's watch what happened after. So we traded higher, then in this fractal from here to here we closed it lower, then we flip it this fractal. So now we're taking this as our flip zone, and remember, every time we're trading to that, every time we're mitigating that 50% of the flip, we enter below the 50% here, and we target the last high or the low that put price into mitigation. Entry here, exit here. So from that point, we have this low and this high, and we made this low. So now we're taking this as our zone. We traded back, traded below, not at the extreme, and we flip it. So this becomes our new zone, right? We traded below the 50%, and here we have another flip. You could enter here, target this or this, and you could enter also here and target this or this. Now that we close it below the flip, we're not using it anymore. We also have this, we close it here, so we're not using that anymore. What happened here? At the F1 we see minutes. So we had this swing from here to here that made a low. We broke that swing, and now it becomes our flip zone. we want price to trade lower than the 50%. That's our entry, and we target the last high that made the mitigation, like here. So price did that. We traded and took the high. We came back and traded higher. Then we took all of this low, this low, and this low, and here we have a zone that wasn't mitigated. We breached that zone and we closed it below, so this becomes our flip zone. So anything that price did was coming back to this flip here. I was waiting for that, and that was my last trade. We came back below the 50%, spike up, coming back, mitigating this high in SNDR, and then we drove price exactly to mitigate the flip. And you could have another trade from here targeting this low, which happened here, mitigation of this high in SND, and then price going higher. And since we closed it above this zone, this is not valid, right? So this was today's session. So I took like 1, 2, 3. I took 3 here, targeting this. Yeah, close it also. Like from here, I wanted to target this high, but didn't happen. I closed half here, then some here and here, and then I left like a small portion and price took it. Here I had my stop here, price took it. And I took this trade also, so it was like 4. Yeah, forgot this trade here that I took. Yeah, there's an important thing, like there's a double top here, we close in below. I took a trade from here targeting this low of a non-structural swing. Like I targeted this and then waited because I wanted to see this SNDR here being wrecked or liquidated, which happened exactly here before taking this high. So yeah, I think the most powerful part of this model is to stick to your conditions of entering a position and just following price action. You don't have too much to do. You don't have to figure out what's happening or how it's going to happen. You just have to be patient, and yeah, that's it.
So those times does the flips give us multiple entries 101
Yeah,
in the times? Yeah.
you can do that. Yeah, you can do that. Like having the same trade from the same level to the same target and using the same stop losses.
Mm. Okay, okay.
So yeah, for ES we had this fractal here. We close it below, trade it above, and at the 50% of this swing, then failed to make another low here. What happened after? We traded above, so this will become our flip zone. We enter below the 50%. As you see, he tap exactly just a little bit below the 50%, and you target this high, which happened here. We have also same thing here. We made a low, traded above and closed it above, traded below the 50%, you have a 1, traded again at the 50%, and you have the second trade. And I think it did also here. You could have also an entry from here to here, and then it was just ranging like here, but I didn't follow ES, but I think we had to, yeah, that what happened from all of this point. We had also a flip happening here. Traded above, then mitigating the 50%, and we may take this high that brought the price to mitigation of the flip, and as simple as that. It looks so basic, so simple, but it's so powerful. Yeah, maybe we're going to take it now, but it's that easy. So what happened here is that by tapping into the flip here at the 50%, we came back to mitigate the zone here before making another high and taking this high, coming back to this zone here. Yeah, that's beautiful. Really, that's really beautiful. Yeah, so do you have any questions to ask about today's trading?